All right. Just want to do a sound check real quick, make sure you guys can hear me. Want to welcome you all to another Greenbridge Investing Market Analysis. This is Mark. Hope everyone is doing well. Obviously, this is a live stream, so thank you for joining me. I just want to do a quick sound check. YouTube really confused me here with the way they made some changes, so sorry about the confusion if you experienced it from your side. So, as you know, in these sessions, I have like a particular topic that I want to go over. In this case, the Bitcoin breakout potential here. And then I want to go over the usual, like we always do. If you have a stock or a market that you'd like to see, please put it in the chat now. So by the time I get to it, I'll be able to read the list in the chat, okay? So with that being said, let's get this thing started here. Hope everyone is doing well. Hold on a second. Just let me get my thing here. Okay. All right. So as we know, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, today is Monday, so you know what that means. We have to go over the economic calendar. And hey, cool. Hey, Ankit, Pow, good to see you guys. So again, everyone else, make sure that you put your symbols in the channel so that I can get to them. Now, let's look at this economic calendar. Again, it's very important to do this, like I always say, because especially if you're in forex, you want to be aware of any major reports coming out for the week. So we don't have to spend a lot of time on this, but let's see what's going on. All right, so I see here we have New Zealand monetary policy statement. You know, we have the British pound unemployment rate. Those aren't going to be a huge deal, especially since we're not in them. Okay, the rate statement, right? The Royal Bank of New Zealand. I saw Andrew was interested in a short on something like that. This news may have come out. Let's see, what's today? No, this is tomorrow. Okay. So yeah, I don't know. I mean, we're not in this pair right now, so I'm not going to pay much attention to that. For the U.S. on the 12th, which is in 2 days, what's that? Wednesday, Consumer Price Index. I would not make a big deal out of these. Usually, unless there's some kind of major surprise, hey Hamid, unless there's some kind of major surprise, these are not market moving events. Okay, Australia unemployment rate, we're not in the Aussie, so we don't have to worry too much about that. This German number, not a big deal. China retail sales, nope, these aren't major market movers. Now, what is this here? On the 14th, which is, what is that? Thursday, I guess these are Thursday's numbers, retail sales, retail control group, blah, blah, blah. Again, as long as there's no major surprises in these numbers, they're not big market movers. You're not going to get the same effect that you get from NFP or a US interest rate decision, okay? So as far as I'm concerned, the economic reports for this week are pretty much non-eventful. They're not really major events, so I wouldn't worry too much about, you know, if we have a forex pair, like if we do take a New Zealand short or something like that, I wouldn't worry too much about those numbers coming out, okay? So now let's take a look at Bitcoin, because again, today's title is about, you know, Bitcoin poised to break higher, but can you handle the fake out? And that's really where the risk is, and that's what I want to focus on. That's the lesson that I want you to take away from this today. Now, as you know, Bitcoin has been in this consolidation, right? And you can see even on my chart here, I have this little bullish trend line, right? This positive sloping trend line here, which is one of the boundaries of the triangle, right? And as you can see, I could draw a horizontal line across the top, okay? Like I can do this, and we have basically that ascending triangle situation. Typically, when you have a triangle, as we know, these act as trend continuation patterns. So if we get a clear-cut breakout, which we do not have yet, but if we get it, then, and it sustains itself, meaning we get a large green candle and it closes strong, especially above this resistance zone. If it does that, then we're likely in breakout mode, okay? Now that's a very tough trade to take. You could try taking it now, which is early, right? We have this outside bar, which is early, but what you have to deal with here is still the probability of this location. That's why I would classify this as a very aggressive swing trade. Now, when it comes to our swing trade strategy, we don't take trades like this because I'm against trades like this. These are the probability of these faking out are greater, and I would rather wait for a much higher probability setup, especially if we're sharing it with our members, right? I want our members to be able to make money. I don't want them to get caught in these situations that, you know, you have to act quickly on. So the ideal inflection point is still that the 10,500 area. That's still the inflection point we're waiting for. So, but the question that I pose in this analysis here is, well, can you handle the fake out? What's the risk? Well, if you take this trade, all right, which is an aggressive swing trade, why is it a swing trade? Well, it does have some potential to run. If this thing closes above this 12.6 resistance zone boundary, if it closes above that, that's obviously a sign of strength, and you may get a lot of new buyers pouring into the market while shorts are going to get squeezed, right? That's the process. So that can take price into the 13,000s. It's possible. What I don't like, though, is the probability of the location is still not that favorable, okay, even though we got this continuation pattern. So to answer the question, though, well, what's the risk? Well, as an aggressive trader, if I were to take something like this, I would have to define the risk based on this lower boundary of the triangle. It's going to be somewhat tighter than the inflection point that we would normally use, but you can't use something like this. You can't go back a couple of days and say, oh, I'll just put the stop at 776, okay, around there. That's okay, maybe if you're in a position day trade where you're trying to capture the momentum for the day and you need to give it some room, because that, for our time frame, that type of stop is very likely to get stopped out because of this type of noise. So you have to put it lower, okay? And it'd have to go somewhere below this low, which is what, 11.5. So it's going to be like 450 or something like that, right? So if you're buying this thing, let's say above this high, let's say you're buying it at 12,100 or 12,050, let's say, you're looking at least 600 or 700 points of risk, at least, okay? That's a tight stop, hoping that it continues. So if you're the aggressive trader and you don't mind taking that kind of risk and you want to give it a chance that maybe this thing will outperform, which is also possible, I just think it's a lower probability based on its location, okay? I could be wrong, and this thing can run to 13,000. All right, it can do it if there's enough buyers jumping in there. But I'd rather take a position where I know that the probability is greater, that it's going to reverse in my favor, and it has the kind of potential that I would like to receive relative to the risk that I have to take, okay? And that's the 10,500 level, okay? Hey, Nicholas. So that's what I wanted to point out about this. A very common mistake that novice traders make with these situations is they take all buy signals as to be the same thing. Oh, it's a buy signal, so that means I should buy. They don't think about the magnitude or the risk that comes along with that particular buy signal. And that's usually, the reason why that's the case is because they usually don't have a clearly defined plan. They don't, if I ask you, oh, are you a day trader or a swing trader? They're going to be like, oh, I don't know, I'm just a trader. You can't, that's not a good answer, okay? You're not just a trader. You have to have a specific magnitude and time frame in mind for every risk that you take. Now, if you say, well, I'm a day trader, okay, fine. Then you're going to have specific risks and you're going to have specific targets based on that magnitude. So that's where people go wrong. If you don't have those definitions, then what will happen is you will make random rewards. So you may get paid this time, but then the next 5 times you take this type of trade, you get hammered, you get stopped out, and then you remove your stop, and then you hold, and then next thing you know, you lose 50% of your account, okay? That's a result of not having a structured decision-making process. Random rewards are very deceptive in this game because they feed your overestimation bias. We all have this. We all have a tendency to think that we're better at something than we really are. That's just human nature. And the market loves to feed that bias. You have to be aware of that. Okay, so that's Bitcoin. That's the situation. And, you know, I'm not a big fan of taking these type of breakouts, especially in this low probability location. Like I said, I could be wrong, but you know what? I don't lose money if it goes higher and I'm not in it, okay? I don't lose money. And that's what's more important, capital preservation. Andrew talks about this all the time. All right, by the way, if you're new to the Greenbridge Investing channel here, make sure you subscribe to the channel. Make sure you like the video if you like it. Also, we have our podcast today at 4:05 p.m. Eastern Daylight Time on this channel. Make sure you stick around for that because, we always have our play of the week and we have a bunch of other things that we're going to be talking about in terms of stocks and metals and all that other stuff. All right, so that's it for Bitcoin. Let's get into a couple of the other markets here, and then I'm going to take your questions about your stocks or your symbols that you'd like to see. So again, put them in the channel. Hey, Shervin. Okay, so yeah, put your stocks in the channel. Now let's take a look at the NASDAQ, NSXUSD, because for some reason I like to forget about this one. All right, and we shouldn't be forgetting about the NASDAQ. Now look at this. This is the CFD, which reflects the NASDAQ 100. This is basically a reflection of the futures, all right? Now, we've been talking about this vulnerable location. How many times have you guys heard me talk about this? Over and over. We're in a vulnerable location, and now we're starting to see the results of that. The other day in the chat room, when we had this vertical bullish candle, when the market looked like this, here I'm going to hide those two bearish candles. The market looked like this, okay? And what did I put in the chat room? I said, don't be fooled by this, because if you turn on any news station or any blogs or anywhere that's public information, they're going to be saying, oh, stock market, all-time highs, blah, 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 not realizing that this is next, okay? Now, how do I know that that's next? I don't. I just know we're in a very vulnerable location and probability favors bearish price action in such an area. Okay, not a good place to be getting long, for large time horizon type of trades. Not a place to be putting on investments. Not a place to be safe or feel safe. This is not where opportunity is. As a day trader, it's a different story. I'm not talking about day trades. So we have this bearish price action now. The next common mistake people run into is they see this bullish pin bar, which is okay, right? But the market's still open, right? Now, we took out this previous bearish candle low, which was what? The 11,000 area. We took that out. Okay, that's basically a bearish signal, but the candle, today's candle is not closing on the low just yet. We still have, 2 hours, and it may close on the low, but if it closes like this, then that's actually a bullish sign again, right? Back into that vulnerable area. What I was going to say is a common mistake is people see this little minor pullback and they say, oh, this must be a good time. This is buying the pullback. Not on our time frame, it's not, because this is not a major inflection point. All right, we have a long way to go before we start reaching anything significant as far as inflection points. So this whole area is still a vulnerable area, and buying now with a longer time horizon in mind is very risky. So, we may have some stocks here and there on our radar for our small bites like we've been doing, but we do not want to be overexposed here. All right, if you look at stocks like Workhorse, which we'll take a look at, they're getting beat up in this, which that's the risk, right? If you buy too many stocks and this thing has a real pullback, a lot of these stocks are going to get hammered, and we don't want to get caught in that. All right, we'd rather miss a little bit more push, a little bit more bullish price action to avoid that broad retrace, because it will retrace. Markets don't go in a straight line, as we know. So we will wait this out. My point is, this is a vulnerable area. I don't care if we get a bullish pin bar up here. Not for our time frame. The risk is still too high. Okay, we want to see much lower prices for swing trades. Although, like I said, if we see some stocks with buy signals in this situation, we won't mind, taking a couple of them maybe here and there, or letting the ones that we have ride a bit if we still have them, if they're behaving. But this is not a place to get excited or to start putting on more risk. All right, so any questions about that, please let me know. Now, let's take a look at I want to take a look at gold real quick, and then I want to take a look at a forex pair, because we still have that Canadian on our radar, and in fact, I may send that out today. All right, because it's behaving the way I was anticipating. So here's gold. All right, this is the gold CFD, XAU USD. I still have my old trade in there. And you can see it's pulling back. It's starting to pull back too. Again, don't make that mistake where, oh, I'm finally getting a better price on gold. This thing has a long way to go. Even though fundamentals favor the bullish movement, the location is still, you're messing around with that 2,000, which is a psychological level. I'm not surprised to see this type of candle around the 2,000 level. All right, so this thing has some room to pull back. I want to see at least a test of this little minor consolidation right here, which is in like the mid 1900s. Okay, even that's kind of not great, but it's better than where it is now. So that's the mistake to avoid on these types of markets that have gone vertical. You don't want to be premature thinking that, you know, any little pullback is the time to buy. These things have some more room, and I'd rather wait for a larger magnitude pullback, just like the NASDAQ. All right, any questions, let me know. We're going to jump over to the dollar Canadian. I'm going to be quick on these because, you know, I do have to prepare for the podcast that we have coming up here. All right, and again, I want to thank you guys for joining me. So here's a dollar Canadian. Now, I talked about this on Thursday and on Friday. And on Friday was NFP, right? And I said, we're getting the location. Now, I just showed you the NASDAQ, and I showed you gold and, you know, Bitcoin, and they're in not so favorable locations, right? The dollar Canadian is the opposite. The dollar Canadian is in a favorable location. This is what an opportunity looks like, a buying opportunity. It's gotten beat up. Okay, it's produced a failed low situation, which wasn't much lower than that low. Not relatively speaking, it's not. And the broader structure is one giant higher low relative to this bullish movement back here. Right, that's what a good opportunity looks like. So Friday we got Friday was this candle here. So Thursday evening we closed. We got the inside bar. Friday was NFP. Now, I don't like taking forex trades into NFP, and I don't really like taking them into a Sunday or a Monday because things can change, right? So we chose to wait. And now look, we're getting this red candle. That's what I'm waiting for. This is the noise candle. And this candle may even test the low of Friday's candle, which is what, 32.81. So this is our opportunity now to get a decent price without having to chase and get a better reward risk. Now, like I said, if I send this out, you'll get the text, you'll get the email with the specific numbers on, you know, where to get into this thing, where the stop is and all that, and the targets and all that stuff. But I want to point this out because this is what a good opportunity looks like. Not when it's pushing its highs, when it's coming off its lows in a relatively strong structure, which is what this thing is. Now, some people may argue and say, oh, but the US dollar, fundamentals, blah, blah, blah. We're not involved in fundamentals. I could care less about the economic situation of the US dollar. All I know is markets are irrational and markets bounce because of this irrational behavior. So it doesn't matter what the fundamentals are. I'm looking for momentum. And momentum is a result of irrational behavior a lot of the time. And it's all about probabilities. So this thing has potential to run a couple of hundred pips. That's just a normal, healthy correction, a bullish correction, and I'm happy with that. So that's what we're looking for there. Keep an eye on your texts, on your phones, and on your emails for that idea. All right, that's on top of the trade of the week that we also send out. So that's dollar Canadian. Again, let me know if you have any questions. Now, let's get into some of the pairs. Actually, before I get into your stocks, I want to address one other one, Workhorse. Okay, WKHS. Now, this was a play of the week that we sent out a few weeks ago. All right. In fact, I think this was from May. I don't remember when I sent this out. It was a little while back. And we put in a limit order at 1585, and this thing went as high as, what, 1942? And our first target was 1985. It never reached our first target. And now look at this price action. All right. Is this a time to get out? Well, here's the answer. In these situations, now again, the NASDAQ is acting somewhat weak. The NASDAQ is trying to hold, and we always warn, if the NASDAQ sells off, these things are likely to get hammered. Well, we're getting a little hammered here. Hey, Alice, we're getting a little hammered. But the thing is, we have to let the idea play out. The stop is at 1385, right? Today's low is what? 1480. So it was like $1, almost like less than $1 from that stop. But it's still doing okay. The trade is still active. So in these situations, you really have two choices. You don't like the price action, you can exit early, take a smaller loss, which we always say, hey, that's up to you, that's your discretion. Or you can let the trade just play out and just stay out of it and let the market determine the outcome of the trade, which is usually what we do. There'll be many times, and we've seen this many times in many different markets, where you get this nasty price action, not really looking good, And next thing you know, it's pushing a target. And you're like, oh, I banged it out for no reason, blah, blah, blah. So often it's better to just keep yourself out of the equation. But there are some situations where you may say, I really don't like this. I'm very uncomfortable. Okay, well, then, it's best to take the loss. Okay, but only you can decide that. So like I said, for us, we have a stop in place. Our risk was predefined, and we let the market determine. And that's it. Okay, we've also made the mistake on the other side, like on the euro. We exited the euro early for a profit at 14.09. Thing went to like 1950 or whatever it went to. Okay, and we missed 500 pips on that. We missed our third target. We easily would have reached our third target in the 18s or whatever it was, and we got out early. So that's why it's usually best to stay out of it and let the market determine. All right, so I just wanted to point that out about Workhorse. All right, now let me take your questions here. All right. So what do we got? First we have USD WTI. Okay, oil. So again, if you have questions, guys, let me know. Okay, so this is the more accurate chart, right? This is the more accurate chart of oil because it factors in when oil went into negative numbers. Some other brokers don't show this. So oil's been, I really don't like the way this chart looks, to be honest. I don't like this just lack of, it's like it keeps just inching forward, and there's just no momentum. Okay. It is at a resistance level, a notable resistance level. It filled this gap here, and now you're starting to mess around with this old support level, which is now a new resistance, 46.45. So that, as you can see, it bounced off of that, right? It touched it, produced a little pin bar. But the problem with this thing is it's just not in play, really, in terms of the wild movements that we're used to. In fact, you have this little mini high or low. When you get a bearish pin bar like this, you should be seeing bearish follow through. There's no bearish follow through. So that's why we've been staying away from oil. I don't like the way it's behaving. There are a number of ways you can play this if you do like oil. Okay. For one, this is not a sell. There's no sell signal in place yet. Okay. You got the pin bar. It took out the low of the pin bar, but today's candle cancels that out. So it's not really, it's not a short just yet. I would wait until more evidence shows up, and it needs to take out one of these lows, like this low right here, which is 38.5. It needs to do something like that. Okay, and that would probably coincide with a dollar rally, because gold will pull back, all the commodities will pull back. Oil is a commodity, and oil will probably feel the pain if you get a dollar bounce, which is what the dollar Canadian is based on. So, before I would be looking for shorts on this thing, I'd wait for more evidence. You either get something like that, pal, or you get that initial sell-off followed by a lower high. We don't have that lower high. We still have a higher high in place, and we have a little higher low developing. So that's the situation on oil. The easiest thing to do is avoid this thing until it really produces a clear structure that we can work with and define risk from. Okay, so thanks for asking about that one. Let's see what else we got here. Okay, Nicholas, INO. So we know that's one of these pharma stocks, right? And it's been, this is going to be very sensitive to news. Now, this isn't an interesting situation. Well, we have that bullish push, which occurred right back in June. It's been testing this support area. Let me highlight that area right here. It's been testing this area at, what is that? Basically the 19 area. All right, maybe the high 18s. It's been testing it, and today it's tried to break below, as you can see with this bearish candle right here. Now, the thing is, although this is an attractive location for sure, in something that's structurally strong, right, dating back to that June squeeze there, that June rally, there's no reason to buy this thing just yet because we're lacking a setup. This current candle is not a setup. It's not a pin bar. Although you have a little tail there, that tail doesn't really mean anything. It needs to be a long tail. That's not a long tail, all right? And the open to the close needs to be very narrow. It's not, right? So if it closes like this, this is one of those situations where you just stand aside. and let this thing stabilize. Now, tomorrow, if it's followed by an inside bar, then that's at least telling us that, okay, it broke the support, but there's no follow through, which means you probably have a bunch of shorts in there that are now going to get caught. And when the thing starts to push, you're going to see new buyers jump in, and you're likely to at least test this level here. This, what is this, 22? 22 area, so I'd be putting my first target somewhere in that area, and it's got some room. What's good about this stock is it's got some potential. Definitely has some potential to at least, even if you test this high over here of this 27, 28 area, which is within reason. I like that potential, and you don't have to take a lot of risk. Okay, you could maybe get away with $1.50 to do $2 worth of risk. What this thing is lacking right now is a setup. So I would definitely keep this one on the radar and watch for that setup, okay, which we will be doing. So thank you for pointing that one out. And if you have any questions about it, let me know. So yeah, so to answer your question, is today's candle just noise? It's bearish, and it's following along, it's behaving along with the NASDAQ, right? That's pretty much what it's doing. So I wouldn't do anything with that thing as far as new longs until that thing shows some better price action there. Okay, Michael, Reefer is also a bit hammered. Let's talk about Reefer. Yeah, so Reefer and Workhorse also is behaving the same way. Reefer was another play of the week that I sent out a couple of weeks ago. Reefer, all right, and that's Research Frontiers. And it started out like it was on its way. It was like, all right, this thing's starting to do its thing. And then, no, it gave it back. So for one, this is why we don't like to chase these things, because you can get caught in one of these. Now, it's so far, it's managing to stay above its stop, but this price action does not look good. This is a lower high over here. This high that it made at like just over 4, that's a lower high, and it's established. Now, you're pushing back into the support. In theory, this thing should make a lower low, okay, in theory. But you may get the failed low here because you do have this bullish structure before it. So that's one thing you have in the favor. The thing is, this momentum just doesn't look good, all right, for the longs. So this, right now, the way this looks, it's likely to get stopped out. All right, now I know, I forget, I put that stop pretty low, right? It's like I put that stop somewhere in the 2s, okay? Which it's one good thing is sometimes it's tougher for these really inexpensive stocks to push like that because they get saturated really fast with all the day traders. You better believe there's going to be a lot of them trying to buy into this support. So we have to see how it behaves. But, it looks like it's, at this point, it's likely to reach the stop. And this is one of those situations where, again, you have to use your discretion. If you don't like that idea, or maybe you want to lighten up on some and get back in if it turns green again, you could do something like that. But that's why we just we have our stop in place, and it either goes to the stop or it doesn't, And if the market has a broad pullback, a lot of these are going to go to their stops. And that's why we've been very careful with our risk. We've only been risking like 1% on every single trade, because if we get caught in one of those situations, we don't want to be losing 10% of our portfolio. That's way too much, okay? So that's why we do that, because at some point the market's going to turn, and it can happen overnight when you least expect it. So, okay, DJ. So well, let me go back here. So Alice, can you please take a look at NOIA? I'm in for free and looking at levels, thinking about putting a stop order. Sure. NOIA. Let's take a look. NOIA. Hold on, let me put that in there, right? NOIA. USD. I would guess that would be against the USD. I didn't like that symbol. Okay. NOIA. Is that the right ticker for that? NOIA. It's not giving me any, let's see. Oh, there it is. I got it. USDT. Oh, I have it against Tether. Okay. So let's take a look at this. NOIA network. All right. I was going to say NOIA. No idea. All right. Bad joke time. All right. So you own this for free. Great. This is nice. Wow. Nice chart. Nice chart. You have this nice consolidation breakout here. Thing is, you have this bearish candle, right? Can't ignore the pin bar. That's bearish pin bar. It doesn't look good there. You may retrace back to this area, which was that previous consolidation. So you're looking at, what are these numbers? 076. that 076 area, right? I guess 7.5 cent area, something like that. It's possible you retrace there. Now you're saying that you're thinking about putting a stop order at the 9 cent area. So let's see, where is that? That's up in here. Okay, well that's not bad. You're likely to get stopped out of that because if this candle closes the way it looks and it takes out that current low, which is what, it's 096, right? You take out that low, so that, and that's where you're thinking about, all right, 0938, okay, to get out of 1/3. All right, I mean that's not bad. You're reducing risk. If it pulls back though, yeah, you can see a decent little pullback on this thing. When they're very sharp and vertical like this, a lot of times they'll give a good portion of it back, especially when you see this pin bar developing. Okay, this type of situation. So if anything, you can't go wrong with reducing risk. You know, you want to put a stop there to reduce 1/3, that's fine. And then see where it goes from there. You know, see how the next leg up behaves. You should at least get an attempt at some point. You know, if you get a little tight pullback, you get an attempt. If this thing can't break much higher than this 11 cent area or going to 12 cents, then you should know at least to reduce your position even more and maybe let 1/3 run to see where it goes over the bigger picture. I mean, you can't argue that this thing is strong overall, okay? You can't argue with that. So it is definitely worth giving it a chance at this point. So thank you for bringing that one up. I think your idea makes sense. So, okay, 1750 is our stop loss for Eno, okay? Eno was a swing trade from Andrew. Oh, okay. Yeah, sometimes, yes, okay. Yeah. So let's see, where's that stop? 1750. And what's the low here? 1824. Where is 1750? Let me take a look here. Is this the high here? 16. So 1750 is like around here somewhere. All right. I mean, yeah, that's sensible. It's sensible. But like again, that's going to be dependent on the Nasdaq. If this thing is following the Nasdaq, which it seems in the Nasdaq's weak today, and this thing is trying to be weak also, then it's likely to get stopped out. I mean, that's the way you have to look at it. That's the kind of candle it's showing. I don't see a bullish reversal candle there. If we close with a bullish reversal candle, or we close without taking out the stop, and tomorrow we get an inside bar, and that high of that inside bar is taken out, then you're in much better shape. But at this point, I would anticipate the stop out. Okay, we have to be, we have to be realistic about these things. Okay, Eno, I don't know, was it Eno the trade of the week? No, because I know HARP was, right. Should we still leave the HARP limit order open? Because I know I sent out HARP. That was the most recent one, HARP. I'm glad you brought that up, Alice, because I wanted to get into that. I want to talk about that. So yeah, see, look, I have the information on the chart here, right? HARP, the buy limit was 1150. I don't think it ever went there, right? What was this low here? Yeah, 1222 was the low, and it took out that little bullish pin bar situation. This is that's a strong move. So I mean, Alice, at this point, you're asking, should you leave the limit order open? I really don't think it makes a difference at this point because it's not likely to pull back to that ideal price that I was looking for. You know, the next price would have been here, this high, which is what? What is that high? 1273. That would have been really the next price, you know? So sometimes you just, at this point, I would cancel the order. Just cancel it and we'll see what happens. You can't chase these things because as you saw what happened with, research for Frontiers. Thing runs a bit, you all pile in, and then it pulls back and you're like, oh, what did I chase this thing for? So sometimes you're going to miss them, just let it go. If it gives us that opportunity where it pulls back to a better price, we'll be open to it. But sometimes you're going to miss these things. Wow, it's too bad we missed this one. That's a nice one. What's the I think did it go to its second target? Let's see, no, 1650, no. The high was 1370, so it only reached its first target. Yeah, I would cancel the order for now, especially if the Nasdaq continues to get hammered. You don't want to leave these orders in there for no reason. So that's the answer for that. Okay, 265 on Research Network, Frontiers. Okay, and that's fine. I closed HARP, had a new higher low. Oh, so Michael, were you long HARP? Did you get into that? Because I know we talked about that and it never actually triggered the order that I had at 1150, and it went to its first target. So I don't know if you made money on that. That's great. That's really great. Could you please look at VLO? Sure. VLO. Yeah, I'd love to hear when you guys have some nice trades. Talk about them. I'd love to hear them. So, Valero. Now, this is, okay, so this is an energy play. Andrew talks about these all the time. You know, oil, like I said, this is strange, right? I mean, and this is not going to follow oil exactly either. This is going to have its, because it has other things going on, other fundamental reasons why, right? Okay, and again, that doesn't really matter to us. Andrew likes to get into the fundamentals. I could care less. Now, you do have a lower high situation right here, and it's not making that lower low, which is good, which means that this bearish correction, this corrective movement, is pretty much running out of steam. That's what that means. Because remember, we all know that the structure that's in play is this structure right here, right? That's still in play, and that's what that bearish correction was correcting. Now, it's changing, okay? This is a sign that it's likely over, and because you have this little mini high or low that's now established. Thing is, today's candle is a spinning top, so it's indecisive. While oil, you know, we saw oil trying to push up there a bit, oil delivering the higher low as well. So this is tough, man. I don't know. I mean, if you like this, I was going to say where to measure risk from, okay? I would probably use this low here, 49.90. So basically like 49.5. But if you're buying this thing, what, at 53.5, I mean, it's still got some room to fool around. So a good way to capitalize on these type of situations is to try to capitalize on the noise, meaning I would use a limit order, just like HARP. I would use a limit order below the market and see if it fills, okay? Like the Canadian, right? The Canadian has a similar situation where it tried to pop on Friday, but we're like, we're not going to chase this thing. And now it's giving us a better price. So in one of these situations, especially since we have an indecisive candle here, we have this spinning top situation, you're likely to get some noise, all right? And you may even get a double bottom. It may test that 49 area. It's possible still, since it's noisy. So one thing you can do to get a better price is you put a limit order somewhere like in the maybe low 50s, and you know, you'd have to put your stop probably $3 lower, something like that, okay? And then at that point, if you're buying it, when you're buying with a limit order and you're buying into noise, it means most likely you're not going to have a setup, which means you're going to have to hope that it turns. That's the only choice you have, and hoping is usually not a good thing. But when you do something like that, you're playing the probability that this thing holds the support, even though there's no sign of it, there's no specific setup. That's what you're doing with a limit order, okay? So you can do something like that, but that's the risk you take. Or you can wait until it gives another little pullback followed by some kind of specific setup. You could do something like that as well, but that's where you run the chance that it continues without you, which you don't lose anything in that situation. But that's what I see on something like this. You do have this little mini high or low developing, and that is a sign of strength. So if this follows through and you don't get a pullback, okay, it's likely to test this high and in theory should push higher. So 56.95, 57, it's likely to go into that 60 area. You're going to need to see, though, I would imagine that a weak oil may have an effect on this somewhat, or a weak stock market. One of them is going to have an effect on this. So you have to be careful of that as well. Because remember, it doesn't follow oil alone. So just keep those things in mind. Generally good position, generally strong, no setup, and that's, you know, some of the ideas that you can work with there as far as measuring your risk and how to get around something like this, okay? You can also use smaller position size as well to manage your risk, which we always talk about. So let's take a look at the next one here. I hope that answers your question, Hamid. Let me know if you have any more questions. Alice, don't really know what to do with Noaya, if I'm honest. Sell some and let the rest run, or close it out here and take the free money. Well, Alice, you know what? Here's the thing. When you have a winner, the best thing to do, the most effective thing to do is to let it run. So locking some in is never a bad idea. You know, you could lock in, maybe you lock in 1/3. Now, it's free money, right? It's always good to take risk off when you have the opportunity. Always a good idea to do that, all right? Doesn't matter if the thing runs If it doubles from here, it doesn't matter, because over time you'll be doing the right thing, because you'll have those situations where you should have taken the money and you give the whole thing back. I mean, how many times have we seen that situation, right? That's very common. So take a little off, let the rest run. You're in for free. So in theory, you have a risk-free trade on anyway. All right, so it's all just profit anyway, but at least you're locking something in and protecting yourself against giving more back than you'd like to. So just think about that. You don't have to think of this in absolutes like, oh, I need to blow out everything, or, it's not all or nothing with these things, right? Try to let your winner run if you can. Even if you hold on to only 1/3 of your position and let that run, hey, it's money you didn't have before. It may not be a lot, but it's still something you didn't have before, right? That's the way you have to look at it. Greed often steps in, and greed will say, oh, you really should go for the home run on this. And I can't tell you how many times I have not made money because I'm looking for more than I should be looking for. And on occasion it gets there, but if I tell you how many times it doesn't get there and I've lost money as a result, it's not worth it. Those home runs are not worth it, okay? So a home run will come along, it comes along great. Like we see them, like Pinterest and some of those other ones that we've had. But don't aim for home runs. Let me just put it that way. All right, so let's see what else we have here. Michael, no, I closed the pending order. Oh, okay, no problem, Michael, no problem. ADVM. ADVM was looking decent before. I was taking a look at that. So it's considering that the NASDAQ is not doing that great today. This trade, this was not a trade of the week. This is one we sent out by text and by email. And this is what you want to see. Okay, look, we have an indecisive candle. We have this, this doji, but it's an inside bar. Now, it's good that you pointed out, DJ, that they report today, because that could be a random piece of information. That may spike this thing higher, or it may spike it lower, or maybe it's a non-event. We don't know. A chart will not help us predict how a report, how they report their earnings or what kind of guidance they provide. A chart will not help us with that information. So what do? Well, we have the target. This thing reached its first target, I believe, right? Target 1 at 1825. So 1/3 of the risk has been reduced. So it's just a matter of, it's a gamble at this point. I mean, there's really no other word. Either you hold through the earnings and hope for the best and see if it works out, which means, you may give back what you got. Or this thing may spike to that second target. It's possible. Maybe it'll gap. So that's, what allows you to be in a position where you can take chances like this? When you have when you've built up some money, you have some profits that you're sitting on. You can, and this thing is green. You can afford to gamble at that point, because what? You're going to give back some of this, and what's the loss going to be? It's not going to wipe out your account or anything, right? Especially if you're at 1%. So that's another form of being a strong hand. Some people may frown upon that word gamble, but that's what it is. You're taking a chance, and there's no way to measure this outcome. All right, either they're going to report good earnings or a positive surprise, and it's going to spike, or they're not going to. People are not going to be happy with their report, and it's going to pull back just as quick. Right, those are possibilities. Or maybe it does nothing, which is also a good possibility if you're long from a good price. Right, and you just let this thing do what it has to do. So that's if you can afford that, and say, hey, if it doesn't go my way, all right, no big deal. I can afford that. If you can't afford it and you're like, no, that would suck if I gave this back, then you should probably unload more, reduce your risk further going into the earnings, and maybe hold a little bit going into the earnings. Because again, it's like a lottery ticket. Okay, what are your thoughts on TMF? I have a call for 45. Okay, I'm leaning towards just cutting my losses. TMF. Okay, let's take a look. TMF. So, one of these. Okay, and you have a call. You said a call for August. You said August 21st, and what was a 45 call? So let's see. What are you fooling around with here? Well, here's the thing. You have a double top. Okay, the double top's been established, and you have red candles here. I don't see this thing attempting to turn around. I don't see a pin bar. I don't see an inside bar. I don't see a green candle. I don't see anything favorable. All I see is double top. So this thing shouldn't be doing this. Now, it's possible maybe tomorrow you get the turn, but the way this thing looks right now, it looks like it has some room to pull back further. And the next place to pull back to, the next support on something like this would be here, okay, around here, which is 42.15. So if you have a call and you have a couple of weeks in that call, I don't know. It might be wise to just take the loss, take the small loss. And if it turns around the other way and faked you out, you get back in. Because, you know, calls, the problem with options, long options, is time is working against you. So you can't really afford to waste a lot of time, right? If this thing's going to fool around the rest of the week and not even, you know, maybe not even go much lower, but fool around, you're going to lose on the time value, okay? And sometimes you're better off just blowing it out and getting back in. So just something to keep in mind there. All right, again, now I'm not giving investment advice. I'm just giving you some possibilities to consider based on how I would manage it if I was in that position. Okay, so let's see, what other questions do we have here? So I hope that answers your question, Henry. So Hamid, what price target should I consider for Assure? I have the stock from 6. Okay, so let's see. ASUR. You have the, oh wow, nice. So you're long from 6. Okay, that's a beautiful price you got it from. Oh, it's a software company. Did you bring this up previously? This one sounds familiar for some reason. I don't know why. Maybe I saw it somewhere else. Well, as far as targets go, I mean, you have a vertical candle today. This is a nice candle to see. Your first resistance is here. So you're looking at the mid to high 7s, which you're almost at. So at this point, I mean, I would probably put one target somewhere there. If you want to split it up in 3. 3 targets, you know, maybe target 1 goes there, because if this thing is strong and it's not showing any signs of weakness at the moment, so let the thing run a bit, right? But take off 1/3 at least at a clear-cut previous resistance. I mean, this is clear. That's a clear resistance level, all right? It was a support previously. It reacted there one time, and here you are almost there again. You better believe others are going to be thinking the same thing. So that's one place to reduce risk, in my opinion. Other targets to consider, well, you have this level here, which is what? The mid-8s. So that's another inflection point to consider. And then, of course, you know, you have the obvious one, which is way up here, which is like that $9 area. So between, you know, if you distribute those targets between here and $10, you should be okay. Now, at some point, this thing's going to find selling activity. I mean, there's just no way around that. It's just right now, when I see vertical like this and you're in from a good price, there's nothing to do but let it run. All right, and just put a target at a, you know, at an inflection point and see if it goes there. If it gives you a hard time and never reaches that first target, then, you know, unload some. At least I would unload a portion of the position and lock in some of that profit. Okay, at that point. But wow, what a nice trade. Where did you get this one from? Was this one you found on a chart or something, or was it like from a newsletter? I mean, you don't have to tell me specifically, but I'm curious. Now, it's a very nice one. How did we, I'm going to yell at Andrew. How did we miss that one? Anyway, right, that's beautiful. Okay, so let's see. Okay, Michael, Alice, I'll take 30%. Okay, 30% sound like my next. All right, so let's see. Yeah, I wasn't liking it. Thank you. Okay, cool. All right, you guys. So yeah, I think I pretty much answered everyone's questions. I've been talking for almost an hour. Right, you guys must like to hear me talk because, man, I don't like to hear me talk sometimes. No, I'm just kidding. So thank you, guys. I'm going to wrap this up because I have to prepare for the podcast that we have at 4:05 p.m. Eastern time. So hopefully some of you guys stick around for that. I know you guys are in some other time zones where it may not be possible, and I understand. That's cool. Oh, cool, Hamid. Thanks. So if you guys can stick around for the podcast, that'd be great. We're going to go over some different things there. We have some other stocks to talk about and some other things with gold and silver and all that. And plus our, you know, our trade of the week, which we will send out by email for those of you that are registered. Whether you're free or a paid member, you'll get it either way. And I want to thank you guys for taking the time here and spending it with me. Now, if you're new to Greenbridge, make sure you check out our website at greenbridgeinvesting.com. We do have swing trade signals, and we have portfolio management ideas, and we have our chat room where we have a lot of insight in there. Plus, register for this channel here, all right, if you like it, because every time I do one of these videos or our podcast, you'll get an email notification from YouTube. And like the video if you like what I'm doing here. I appreciate that. All right, so thank you very much, everyone, and I'll see you on the podcast. And if I don't, enjoy the rest of your day. Thank you for joining me. I'll talk to you then.